I'm announcing my candidacy. I'm not leaving office as Minister of Finance for France. It is now for the membership to decide, and I will leave it to their wisdom, to their judgment.
The International Monetary Fund has today selected Christine Lagarde.
Madam Managing Director.
Thank you very much. Bonjour. Good morning to all. It's very, very nice to be back in Washington.
And it's great to have you here, Madame Lagarde. Good to see you again.
Lovely to be with you.
That was a few hairstyles ago. Christine Lagarde back in 2011 when she was named Managing Director of the IMF. And then one of my early interviews with her. She's now heading to Frankfurt to be the president of the European Central Bank, one of the most powerful central banks in the world at a pivotal time in Europe's history, facing recession, Brexit, and ongoing trade uncertainty. I did sit down with Christine Lagarde on Friday, asked about trade, China, and its impact on growth right now.
You know, what concerns me at the moment is that trade, instead of being that sort of big window of opportunities for those economies that want to compete with each other, it weighs like a big dark cloud on the global economy. And based on the latest calculation of the IMF, if the tariffs that are either here already or threatened to be applied were to apply, we're talking about reducing global growth by 0.8%. That's a massive number. Growth forecast for next year is 3.5%. You take out 0.8, that hurts. It's fewer jobs, it's less business going on, it's less investment, it's more uncertainty.
Could it take us into a global recession?
Recession is not in the IMF baseline, but the longer this lingers, the more uncertainty sinks in. And if you're an investor, if you're an enterprise, whether small, medium-sized or big, you're not going to invest. You're going to wait. You're going to sit and wonder where the supply chains are going to be organized, where the big market opportunities will be, and how much the tariffs will apply.
So you've been at a lot of these meetings at G20. There have been breakthroughs, there have been setbacks, there have been tariffs. What's your expectation at this point of whether we'll see a deal between the US and China by the election next year?
Well, first of all, you're comparing a multilateral dialogue at G20 level and a bilateral discussion that is taking place between the two largest economies in the world. I very, very much hope that there is a deal, whether it's partial, whether it's complete, whether it's in process, between the United States and China, because it would not necessarily yet remove entirely the cloud, but it would give hope to all operators that the cloud is being addressed and that hopefully it will be removed.
Do you feel that trade is the biggest hurdle right now for the global economy, the biggest risk?
I think threat against trade at the moment is the biggest hurdle for the global economy. Yes, indeed.
You know, President Trump has also threatened Europe and has accused Europe of protectionist measures. If he moves on from China and goes to Europe and starts a fight with tariffs to try to get better terms, would the European economy be able to handle that?
You know, what's comforting is that ever since last July, there has been this ongoing dialogue between the United States and Europe in order to address some of the issues that they have in terms of access, in terms of protectionism, in terms of whatever each party sees as preventing it from accessing the market. And I hope that that continues and that it's a fruitful and productive dialogue. Europe and the United States have been friends for decades and centuries, have often, been on the same side of the battlefield and have rescued each other on many occasions. And I'm very grateful to the United States for that. It's not a relationship that should turn into any kind of trade war at all.
And that's another thing that you've done is actually you've managed to keep the IMF off of President Trump's radar and off of his Twitter feed, where he's often gone after multilateral organizations like it. How have you done that?
I think that authorities in general, and President Trump is included, see value in what we do. We don't brag about the fact that we are a multilateral institution, but I like to brag about the fact that we are helpful to the membership, that we have addressed special circumstances, that we stand ready to help countries like Ukraine, like Jordan, like Egypt, or like any country that is a member of the IMF and needs help.
So I've covered you, obviously, over the years. I think our first interview was when I accompanied you to Sendai, Japan, near Fukushima.
My gosh, yes.
We actually talked about Europe, but what I was going to say is that I think one of the contributions and the common themes of your leadership has been bringing Asia in closer to the IMF, especially China, SDR as one example. How do you think about whether that was productive, and did you set out to do that?
You know, when I joined the IMF, I was convinced that the institution had to be for the entire membership. And clearly one of the large rising economic powers in the world was China. And I've always also taken the view that you're better off including than excluding. So I reached out to China, that is true, to bring them to the table, to make sure that they were participants in the decision-making processes, that they would be willing to play by the rules, that they would gradually open up their capital account. We're not there yet, but it's something that is making progress, that their currency, the renminbi, would be part of that basket of internationally traded currencies that are regarded as international currencies, really, by central banks.
Does China cheat?
You know, nobody cheats and everybody cheats, let's face it. Because while everybody plays the global tune, and we'll talk about international trade, every country is also in that game for themselves. Because at the end of the day, people will look after their constituents. So it's not a question of cheating or not cheating. It's a question of adopting sets of rules that everybody can play with and that will not be damaging for their domestic base.
Is China manipulating its currency?
This is something that the IMF looks at very carefully. The latest Article 4 that we did about China, and we do that on each and every country, concludes that it's generally aligned with the fundamentals of the Chinese economy.